So picture this. One powerful man makes an announcement, and just like that, in the blink of an eye, the entire global market just goes into a complete freefall. And the crazy part? This isn't some movie plot. This just happened. So let's dig in and uncover the real story behind one of the fastest financial shocks we've seen in a long, long time.
Just look at that number, $7 trillion. I mean, that is the absolutely colossal amount of value that was just gone, wiped off the books. It's a number so huge, it's honestly hard to wrap your head around, but you can bet its impact was felt instantly, all over the world. And here's the thing that's truly mind-boggling: the speed. Yeah, this wasn't some slow burn, a week-long slide. This entire $7 trillion implosion happened in about 60 minutes. 1 hour. That's it. In the time it takes to watch an episode of your favorite show, a financial earthquake literally shook the world.
So that's the billion-dollar question, isn't it? Or, I guess, the $7 trillion question. An event this huge doesn't just happen in a vacuum. It wasn't a computer glitch or some random market swing. So what was the one announcement that could possibly unleash this kind of chaos? Well, the answer is a pretty wild story of power, policy, and politics.
Okay, so to really get what set this whole thing off, you gotta see just how widespread the damage was. I mean, this wasn't contained to just one little corner of the market. Oh no, this was a fire that spread absolutely everywhere. And as you can see here, nothing was safe. Stocks obviously took a massive nosedive, crypto plunged, and even the things that are supposed to be your safe havens, like gold and silver, they got hammered too. This was just a classic, full-blown panic. Investors were selling everything that wasn't nailed down. And this right here? This is what tells you just how weird this whole situation was. Gold, the one asset people run to when things get scary, it dropped by a massive 8.2%. That was a huge red flag from the market that something was fundamentally broken, that the normal rules just didn't apply anymore.
Now, in all that initial chaos, you heard some analysts trying to explain it away. Oh, it's just simple profit-taking, they said. But that was just noise. The reality was so much more dramatic. This wasn't really about economics, not in the traditional sense. This was a high-stakes political power play that just spilled right out into the open.
All right, let's cut to the chase. The real reason for this $7 trillion crash wasn't about corporate earnings or balance sheets. No, it was about a fundamental knockdown, drag-out fight over the direction of the world's most powerful economy. And right at the dead center of this whole mess is this one institution, the Federal Reserve. The Fed. Basically, think of them as the guardians of the U.S. economy. Their main job is to keep things stable, and they do that mostly by controlling interest rates. And this role, it's supposed to be completely independent of politics. Supposed to be. And this is where that abstract policy stuff turned into a very public, very personal clash between two of the most powerful men in America, President Donald Trump and the chairman of the Federal Reserve, Jerome Powell. And this slide, it just lays it all out, right? You had Trump, who wanted a booming economy, publicly screaming for the Fed to cut interest rates, to make borrowing cheaper and keep the party going. But then you have Powell, whose job is to keep prices stable and employment high. He believed rates needed to stay put to keep inflation in check. A classic standoff. And then, the moment of truth. Despite all this incredible political pressure, Jerome Powell and the Fed, they didn't blink. They made their announcement. Interest rates would stay exactly where they were. They chose stability over stimulus. And that is when everything just exploded. And the response from Donald Trump to the Fed's decision? It was fast and it was brutal. This was the message that went out. It was basically a public declaration that he was going to fire the chairman of the supposedly independent central bank. The standoff had just become an open war for control of the entire U.S. economy. So, this public showdown, it just threw a massive cloud of uncertainty over the future of the US dollar. But the way the market reacted was, well, it was deeply strange. It was this paradoxical panic that had even the most seasoned traders scratching their heads. And this is where things get really weird, right? This is the question that baffled everyone. The logic is supposed to be simple. If the US dollar is in trouble, assets like gold, which are priced in dollars, should get more valuable. So why on earth did gold and silver crash right alongside everything else? It just didn't make sense.
Okay, so the theory makes perfect sense on paper. But what the theory didn't factor in was just pure, raw panic. The threat to the Fed's independence created such extreme uncertainty that investors didn't just sell some stocks, they sold everything. In a moment of total get-me-out fear, when margin calls are hitting and liquidity dries up, the only safe haven anyone trusted was cold, hard cash.
So, after the dust settled, or actually, while it was still settling, everyone was asking the same thing. Okay, what happens now? With Powell's job hanging by a thread, all eyes turned to who might replace him and what that would mean for the future of the Fed. And pretty quickly, one name started bubbling up to the surface, a guy named Kevin Warsh. Now, he represents a complete 180 from Powell's policies. He's all for lower interest rates, a weaker dollar, and maybe most interesting of all, he's seen as a big supporter of cryptocurrency. So what would a Fed led by Warsh actually look like? Well, this table kind of lays it out. A weaker dollar policy, that could be a major tailwind for assets like crypto, potentially sending prices way up. But here's the crucial takeaway. This kind of shift would inject a massive dose of unpredictability into the system. Overall market stability would enter a period of much, much higher risk. And at the end of the day, this all boils down to one really important lesson. This whole episode is just a powerful reminder of a fundamental economic truth. Whenever political power messes with the independence of a central bank, that economy, and by extension, the entire global market, it just becomes a much riskier place for every single one of us. So what's the real takeaway from all this? Well, this event was way more than just a market crash. It was a wake-up call, a stark reminder of just how fragile our financial systems really are to political pressure. You see, the independence of places like the Fed isn't just some abstract idea. It's the very bedrock of stability. And when that foundation gets shaken, it proves that $7 trillion can just vanish in an hour. And it leaves us with a pretty chilling question. In a world where politics and policy are this tangled up, where is the next shock going to come from?